So instead of wholesaling capital, or instead of wholesaling houses, you can wholesale capital. I have access because of AAPL to over $300 billion in liquidity and capital right now. And the thing is they can't find deals. And so, for your people that are in Phoenix, you should always be wholesaling in a wholesale market. You should always be wholesaling whatever you have an abundance of. You don't have an abundance of houses, you have an abundance of capital. There's so much liquidity out there. And so why not actually step on the side of the lender? And it's possible to do that. So we've been teaching hundreds of people how to actually get access to the capital, which, we've actually built direct access, and then use the capital for themselves if they have access to deals, or find the guys that are still finding the good deals, or they've got fix and flips, or they've got, maybe some properties they've been sitting on, and wholesale the money to them and actually make money wholesaling money, not just wholesaling properties. That's a great way. Like I would say right now, if I had to start all over again, I would be 100% in brokering private money, because it's an easy way, it's fixed. And, we've got hundreds of people that are crushing it after launching our program about 6 months ago.
So, now we're not just talking fix and flipper. Like, what are the exits on this money? Like, what products are there?
Yeah, that's the crazy thing, is like there's so much money. And this money isn't like from hard money lenders and stuff like that. This money is institutional. It's coming from massive institutional banking entities, the largest insurance companies in the world, pension funds, hedge funds. Like that's where I'm getting this capital from. And, they don't care as long as they understand the liability. So, you can still do a fix and flip. You can do buy and holds. Anybody that's, holding on to rentals, you can use it for that. But also you can make a whole lot more money if you're doing storage units, assisted livings, ground up construction. This capital loves land development. It's like one of the greatest margins right now is land development, because, most of the home builders are publicly traded. So they don't want to hold that land on their balance sheet. So you take a private investor like me, I can go get private capital, develop a plot of land, and sell it 2 or 3 or 4 lots at a time to DR Horton. And they're happy. And I'm making 30 to 40 grand on a lot, where it's tough to make 30 to 40 grand on a flip anymore. It's like I can make 30 to 40 grand on a lot that I have very little into all day long if you have access to the private capital. So there's a ton of exit strategies. We just financed a boutique hotel in Nashville, assisted living down in Florida, a whole rental portfolio of about 300 properties right there in Phoenix. I mean, this private capital is being earmarked for everything, because that what they've finally gotten wise to the fact that they really need to be putting this money into hard assets. The market is too volatile right now. You can say all you want about how exciting crypto is. It's like, but the people that were at 103, 103,000 on Bitcoin 3 weeks ago and are at 84,000 a day are thinking twice about it. It's like, well, a real estate asset's not going to drop 20% in 30 days, right? Like you're going to gain 7, 8, 9% year over year. And in the big inflationary time periods like Phoenix has gone through, you're going to see a 20, 30% increase in price. This capital source is all in on hard assets right now.
I love that, man. Marcus, any questions, or I can keep going?
So I know, Eddie, you said that you're bullish on multifamily. Why is that? Because, everything that you hear out there is, office space, they're trying to convert to multifamily. Phoenix, we're overbuilt on multifamily. And I know that's a lot of the white noise, but why are you so bullish on multifamily?
I'm bullish on it right now because the banks are a little scared of it. And the reason they're scared of it is because the last year or two, there have been a lot of new syndicators and investors that have really struggled with multifamily. And what's happened is they've put all the work into it. I've been buying an apartment complex almost every single month for the past 6 or 7 months, because you have a lot of guys that are brand new in that space. They got a bunch of real estate investors to go in with them. They rehabbed an entire multifamily property, and then they went to go get their long-term financing. And Freddie Mac said, hey, you don't have enough liquidity. We're not going to finance you. So I'm buying multifamily deals at 75 to 85 cents on the dollar, already rehabbed, already at 80% occupied. All I have to do is, bring the down payment, and, I've got long-term financing.